is DMART, but that has been continuously dropping as far as the share prices are also concerned, and the earnings have come out disappointed as well. DMART shares fell about 5% in the intraday levels today, second day in a row. Margin drop as well, a Q4 profit miss as well. Rising concerns of the intense competition that may rise from Reliance Industries that has a tendency to offer a lot of discounts.
Since the IPO, DMART had given huge returns to its investors. The issue is priced between 295 to 299 per share, and it made an all-time high of 5,900 rupees. If you are still invested in DMART stock, you must have noticed that DMART stock fell by 30% in last 2 years. So in this video, I will be going through the possible root cause behind this slow momentum, and also we will be analyzing how DMART operates. Let's start the video with some numbers. In last 10 years, DMART sales growth CAGR was 30% and profit sales growth CAGR was 26%. But in last 5 years, sales growth CAGR became 21% and profit sales growth CAGR became 26%. This data shows us that in last 5 years, DMART's revenue and profit sales growth is moving very slow. To understand what's happening in the DMART, we have to understand what are the changes that retail sector had seen in last 5 to 6 years. So I'm 24 right now. 5 to 6 years ago, I was in college doing Bachelor's of Technology in Computer Science. When it comes to grocery shopping for us, if I keep out the option of local vendors, all other option we have is to shop from DMART, Reliance Retail and Big Bazaar. These three were the only retail chains that are operating that time in retail space. Now let's come to the current scenario. In the era of internet, retail sector also came online. You can easily buy groceries online. Amazon Fresh, Flipkart, Big Basket, these are some players in the online space. Last month when I was in Indore, I ordered groceries online using Blinkit and they literally delivered my order within 10 minutes. So the point is, all these online players and these quick delivery companies somewhere going to affect DMART. But wait, DMART have an huge advantage which none of its competitors have. But before we discuss about the advantage, if you are still watching our video, make sure to like the video and subscribe to our channel. It will help us with the algorithm. Let's get back to the point. The advantage is the policy of discount every day. These quick commerce services like Zepto and Blinkit will surely give you discount when you sign up, but it's valid for the first few orders. Whereas DMART will always offer you huge discounts on the product MRP. Have a look on the price difference between actual MRP and DMART's price. It's impressive, right? Have you ever thought about it how DMART is able to offer you such prices below MRP and is still making profits? If yes, I am here to explain. Let's break down the DMART business model. Radhakrishnan Damani, the founder of DMART, was very clear since the beginning that he wanted to replicate the famous retail chain's Walmart model. That is high volume and low margins. He wanted to understand the basic items in the traditional household shopping carts and provide the best values for those carts. His main focus was to run a company with positive unit economics. In 2017, DMART went public with an IPO size of nearly 1800 crores. And nowadays, it have the market cap of 2,48,000 crores. To maintain the low margins in each product, DMART have to cut every penny possible from everywhere. The first major thing that differentiates DMART from its competitor is the strategy of not renting but directly owning the space. DMART outlets have an average area of 67,000 square feet. By owning the place, DMART nearly save up to 5 to 7% of the revenue. Another differentiator is the localities of these stores. While you find Big Bazaar and Reliance Retail stores inside malls and shopping complex, DMART stores usually take a different angle. DMART first analyze the city and try to find the place where they can witness heavy footfall and then build their own stores. DMART have 324 stores across 14 states of India and all of them are one floor structure. So DMART's idea behind this strategy is to essentially have the freedom to create large warehouses like stores so they can manage their supply chain and inventory efficiently and save the money on the rent as well. For the retail chains like Big Bazaar and Reliance Retail, they spend 5 to 7% of their revenue in rent, while setting up a store like DMART is one-time expense. DMART also follows a very different approach on its expansion. Reliance Retail is not able to squeeze in as much profit margin as DMART does. Nor it can handle the huge footfall in a single stores. So the only way for them to increase their volume is through the rapid expansion. Reliance Retail have more than 18,000 outlets throughout the India, whereas DMART only have 324 stores. You can easily notice that DMART is expanding really slow. The reason behind DMART's slow expansion is its cluster expansion model. Like Walmart, DMART only expands its stores in clusters, means it first established a distribution center in a new locality and then build stores around it. DMART also tried to make some revenue using its slotting fees. As DMART have huge footfall, brands pay them a fees to have their product on their shelf in order to increase their sales. अगर आपको उनका प्रोडक्ट दिखेगा ही नहीं तो आप खरीदोगे कैसे? And that is why DMART charges them to make their product visible. Also, DMART has to stock up quite frequently given their high turnover. On top of that, DMART is famous for paying vendors and manufacturers much more quickly than other retailers. The usual industry norms is expecting payment in 30 to 40 days, but DMART pays them within 7 days. So because of the DMART quick credit cycle, they are offered much lower prices than others on already wholesale rates. DMART also tried to make their expenses as low as possible. Any DMART stores looks like a shabby warehouse with thousands of people crashing their carts into each other. The shopping experience at peak timing is a struggle in DMART, but thanks to their low prices, people keep coming back. And DMART saves a ton that it would rather have to spend on ambience or customer experience. DMART का अपने एक्सपेंस को कम करने का नेचर एक टाइम में इतना एक्सट्रीम चला गया था कि राधा कृष्णन दामिनी ने एयर कंडीशनर्स के लिए भी मना कर दिया था, but thank God he changed his mind. DMART also have huge variety of products in its stores. You might have noticed that DMART stores not only carry food and grocery items but also carries a bunch of different products like footwear, bed sheets, etc. The reason behind this diverse product mix is simply the individual product group margins. Have a look on this. Food, groceries and FMCG products account for DMART's 50% of sales. In order to make more money, they need to sell other products as well. That's why huge warehouses like stores works in the favor of DMART. Even if you grab a pair of shoes and couple of bed sheets on your way out, DMART will make better margin than usual. Finally, instead of providing the range of products, DMART focuses on understanding the top selling product in their locality and only stocks those products. It saves a ton of money on inventory through this and its sales numbers stay high. Now you folks must have an idea how DMART is still able to make profit while offering huge discounts over MRP. When Big Bazaar failed, many of the analysts thought that DMART will going to rule the market, but suddenly Mukesh Ambani started focusing on its company Reliance Retail. In financial year 2022 and 2023, Reliance gross revenue have jumped by 30%, from 1,90,000 crores to 2,60,000 crores. Also, net profit margin jumped by 30% as well, from 70,000 crores to 90,000 crores. Reliance profit is 4 times of DMART and revenue is 5 times of the DMART. And also Reliance is growing at the rate of 25 to 30% annually. You can see the data on your screen that the thousands of stores start operating in last 2 years. You can see how aggressively they are working on their expansion. So till now we have only talked about what's going in the offline world. Let's see what's going on the online space. Reliance is also focusing on its online retail platform, that is RGO and JioMart. And DMART also have launched its website DMART Ready on few cities. Although the revenue is growing from 791 crores to 1676 crores in 2021 and 2022, the online platform DMART Ready also observed growth in the losses as well. Let's come to the conclusion now. DMART is a safe stock. A stock with no debt has very less chance to collapse. Also, DMART only uses its profit to expand, and that is why you can see DMART is expanding really slow as compared to its competitors. DMART listed at the price of 650 and after some time the share went skyrocket. And it made the all-time high of 5,900 rupees. To capture this opportunity, huge chunks of retail investors invested their amount in DMART in initial days, and because of this huge investment, PE of DMART went to 200. Since last 2 years, I think the valuation correction is going on, and right now it have the PE of around 90 to 100. Yes, PE of 100 seems to be pretty high, but retail sector have an average PE of 100 to 110. So it means if you have really long-term view, DMART can be a good stock to bet on. Thank you for watching till the end. If you like the video, do subscribe us and hit the like button.